Welcome to Total Money Management Podcast. We're back again with Tom Hill and a man with a peg on his nose, Steve Moriarty.
Stop it.
Disgusting.
Beautiful. This time of year is so beautiful. It's unbelievable. This is the best time of year to go to the coffee shop, sit outside with an iPad and read. And in my case, you can go to the coffee shop, sit outside to sneeze your fucking head off.
I went to grab a coffee with Steve this morning. I was like, mate, what are you... What's up your nose, mate?
No, it's just terrible.
What's he been up to?
I know.
Yeah.
He's been making so much money on those gold ETFs.
If I was snorting cocaine, I wouldn't be complaining. Right? I'd be sitting there going, more of this stuff.
We're trying to be more discreet, mate.
Discreet is not in our copybook.
So it's election day.
Yes.
Today.
Vote early, vote often.
Yeah. I don't have to vote, thankfully, because I'm not a citizen.
No, mate.
Let's
refrain. It's not. You don't have to. We don't allow you to vote.
Yeah, not yet, anyway.
Let's refrain from politics today, Steve.
Yeah, well.
We don't want to upset too many people.
Why? Who cares?
Okay,
Jesus, that's our modus operandi.
Who are we voting for then?
Oh, God.
The winner.
No.
The winner.
Yes, no. We always pick winners.
Well, no, but
Not
interestingly enough, Tom, as I think I said in the little video for the week that was this week, the one thing that really kills people, and Tom, I'm glad you brought that up. If you follow X right on Twitter, you should see some of the crap that people put on there about politics, particularly the losers. Right, like it looks like Peter Dutton's going to lose, right, and Albo will be re-elected. People on there, mate, I'm not kidding. You'd think that we were a third world country that was full of corrupt dictatorships, and we're all, Australia's gone to hell in a handbasket. Meanwhile, here we are with full employment, growing wages, stuff like that. And people are like, oh, it's the end of the world and it's all going to die. And I thought, I just keep writing to them going, well, that's bullshit. That's just your bias, right?
Well, it's the same as investing, isn't it? You just have your bias.
Well, yeah, if you bring your look, I can tell you, if you bring your bias into a stock market, it'll cave you in real quick.
Yeah.
Right? And you see this often with things like gold, stocks, property, Bitcoin. And that's what we try to say to people is, look, don't have a bias for anything. Just look at it and say, what's the market history? Where is it in the market cycles? We were just talking about precious metals, right? And they've done really, really well. Now, I'm not a big fan of precious metals. I'm not a really big fan of gold. I think the arguments for gold are largely bullshit. But I'm not an idiot. It's like, hey, gold's cheap. Okay, well, I think it'd be stupid. I go, oh, sorry, I'm not into gold. It's like, okay, more fool me if I'm not.
Yeah, it's not as if gold's going anywhere anytime soon and it's never going to be traded ever again.
Yeah, exactly. I think I wrote about it on the socials with oil, yesterday's post, right? Like there's some oil stocks that are like unbelievably cheap. And you have to say to yourself, okay, well, will oil prices never go above $50, $60 a barrel? Well, the answer is obviously no. The answer is yes, they'll go above, in 5 years' time, they might be 80 or 90.
Yeah. By saying the opposite, you're saying that oil's never going to be used ever again. And that's
that's like if you look at the stocks and they're really cheap, generally the narrative is, oil's a greenhouse bad, right? Okay, well, that's negative. Nobody wants oil anymore. All right. We're going to have electric vehicles. All right. But that's why it's cheap.
Yeah. Then people will realise, we still need oil.
That's exactly right, Tom. In 12 months, I go, oh, man, I should have bought oil when it was $60 a barrel.
Well, that's what happened in COVID, right? Oil absolutely took a dump. And then...
Took a dump. They couldn't get rid of it.
Yeah. Well, it was at zero.
Yep.
Minus, actually. Futures were at minus whatever.
Yep. Good times.
They were good times. I distinctly remember trading 1 minute candles with Jacob
at 3 a.m.
Yeah.
We were up at 3 a.m. making thousands and then losing thousands. It was so good.
Good to see my workers,
We were just flipping coins.
Your workers. Steve owns us now.
Keep focused on valuation, lads. Yeah, shut up, mate. I'm just trading oil stocks for, 30-second candles.
Yeah, we made loads
That
of
was
money.
so fun. We were barons for a day.
Yes.
Oh, dear. Anyway, what do we got?
Well, the S&P, a lot of S&P 500 firms are recording the sharpest decline, or at least the outlook since 2020.
Yes.
So you got your Teslas that are going nowhere, and I mean even the big dogs like Coke and Pepsi that usually give a good return, which we'll talk about soon, are projecting a decline. So.
Yeah, everybody's just sitting around revising, waiting for the tariffs, to work out what's going on there. Yep. There was a really big issue this week, which I think we highlighted about a month ago I think it was in the tariff special or something, but it's called the de minimis policy. Essentially what the US said was anything that's worth under $800 basically comes into the country free, right? So there's no restrictions, or they don't open it up and go, oh, is there 5 T-shirts? Oh, look, they've packed 6, that sort of stuff. That's how fentanyl is getting into the US, right? Because they're putting it in under the $800. And a few months ago, there was a report that came out, the America-China Security Report or something. I think we spoke about it then, and one of the major recommendations was to stop the de minimis policy. So in other words, anything under 800 is now going to be captured and has to be sort of checked and stuff, right?
Right.
So
they're basically increasing security around that.
Exactly.
Yeah.
And what happens is, those Chinese companies like Temu and Shein, is it Shein or Shine or Shein?
Shein, yeah.
Those have thrived because that's why they can, my daughter buys stuff from Shein, like $20 tops and all that sort of stuff, right? Well, that's all going to stop, right? That's now all going to be priced out. So that's going to be a big hit to a fair few Chinese and other countries, those sort of firms that have focused on those products. And again, it's just another step in the trade war, right? And it's just, there's a whole raft of stuff going on, right? Donald Trump said that the US government may take a stake in rare earth mines, right, for the critical minerals, right? This week, they signed the deal with the Ukraine for the critical minerals.
Well, the market loved that.
Absolutely. Because we know, and we talked about it last week, where we were saying the rare earth stocks, went up 30 or 40% last week, right? Because the market is starting to see now the importance of critical minerals to, I think, Tom, you talked, F-35 jets and all this sort of stuff. So basically you can't do anything modern without them.
Yeah.
And so you look at that and go, we really need this stuff.
Yeah, well, it's the new hot topic, right?
Exactly. Yeah.
So,
and that's where the US, sorry, Jacob, that's where the US have signed a deal with the Ukraine to talk about the critical minerals. And Trump's got a good point here. He said, hey, if we've got a financial interest there, let me guarantee you, we won't be letting anybody in, right? i.e., because the Ukraine said, we need a security guarantee. Right, and what Trump said was basically saying, no, I'm not sending over soldiers. I want to buy some of your rare earths. So I'm going to invest. The quid pro quo is you get investment, and by default, we're going to be there looking after the country because we've now invested in it, right? And that's a really important point. And you're going to see a lot more of it. Anthony Albanese highlighted a critical mineral strategy, right? So it's really important, and we'll do a podcast on this soon because it's a really important topic, right? It's like today's oil. It's like yesteryear's oil, right? Everybody needed oil. These days, everybody needs rare earths, right? And that's the scramble.
I think it'd be good to chat for half an hour, 45 minutes on that and just break down what rare earths are, how they're used, how people invest in them.
And the homework will be saying, how do you spell neodymium and praeostadium, if you guys remember last week?
Yeah, we can just make our own ones up.
Yeah.
Yeah, that's probably not a bad idea.
Yeah.
We'll just throw a few in there to sound good.
Jacobium.
Yeah.
All right, so...
Seniorium.
Seniorinium. So the number of ships heading to the US is. I was actually looking at
Coffee's
something.
kicking in.
Yeah. I was actually looking at something online a few days ago, and it showed the China port, which is booming.
Yep.
And it showed the generally the world's busiest port, which is in America. Forget what, maybe something like LA, somewhere like that, which is dead. There's about 4 ships there.
Yeah, there's still a lot going on, but there's no doubt that I think we said last week, keep your eye on shipping.
Yeah.
It's this week. Shipping will be a good indicator to watch because it's. You guys are probably too young, but there's a thing called the Dow theory, and the Dow theory was invented in about I think it's about 1930, and basically what it said was if you watch.
You'll be too young for that, mate.
Sorry,
you'll be too young for that.
Yeah, even I'm a bit young for that one. The idea was if you watch the Dow Jones and Charles Dow created it. What he said was if you watch the transport index. That was a good indicator because, in those days they were shipping stuff, right? Baked beans and shirts and all that sort of stuff, right? Whereas today it's Facebook and Google and stuff. So what he was saying was if that starts to decline, that gives you a bit of an idea about, people aren't spending as much money. And what I'm saying is shipping is the sort of global equivalent. Right. If there's no ships moving, you go, hang on, there's nothing.
Well, that still exists. You got to look at transportation, trucks, ships, aeroplanes.
Yeah, absolutely.
If they start to decrease, then you kind of go, oh, okay, what's going on?
Yes, there's a decline in trade between countries.
Yep.
But shipping is better for global stuff, Jacob, because you don't move global stuff by truck, obviously.
Yeah.
So you can have in America, trucking will be strong. But it'll be strong because there's domestic investment, whereas the stuff from China will be declining because they'll be doing more in house.
Yeah, and that makes sense. And it'll be. I wouldn't call it necessarily a lagging indicator because we can see here that April it just went through the floor.
It plummeted, yeah.
So it's kind of a real time indicator.
But there was a big build up, in February, and that was Trump was inaugurated. And then people went, okay, if we're going to have tariffs, we better really order 100 million T-shirts, right, and get them in before the tariff.
Yeah. Well, that would have just been tariffs turned on
yes.
and the ships stopped in mid-ocean.
Yes.
And just waited.
Well, there was some guy, I think, who wrote, he bought stuff worth $120 and the bill was $255. The tariff was because it was 145% on China, right? So... that's going to knock a hole in a few people's budgets.
So how's it going to impact inflation? Because that's the next...
Well, it's interesting, right? In the last couple of weeks, I've noticed anyway, the tone seems to be changing. More and more people are talking about expecting a recession.
Yeah.
And then, we're also seeing like on Monday, we start talking about, there was an article here shared by Bar Chart, where Americans are expecting inflation to soar another 6.5% within the next year. So you've got the R word being thrown around. We've got,
inflation.
Exactly right.
Yeah. You got that commonly referred to as stagflation. You get high unemployment. But I think I think we have to get, and again, we talked about this in the new normal, you have to get used to the idea that you're going to have a lot more inflation. Donald Trump is obviously aware that prices are going to rise, and he's been saying to people, you'll get some pain in the short term, right? Which is true.
Can I just ask something though? Okay, we see all this inflation where our dollar is going way less further than it has in the past, but it doesn't seem to come back down. Like inflation seems to be a one-way street. Like I don't see Doritos going back to $3 a packet.
Never.
They're probably going to stagnate at $10 a bag.
Yeah. And that's the hard part for workers, Tom, because the coffee goes from $4 to $4.50, but it doesn't go back down to $4.20, right? Even if inflation falls back to now in Australia, it's at like 2.5 or something, right?
Yeah, inflation does go up and down, but the price seems to stay the same, right?
Yeah, well, if you start paying $4.50 and you don't change your habits, well, why would a shop give it back to you for $4.20?
Yeah, wind up.
Right?
Inflation.
It's just It's just the way it works.
Yeah, but I mean, but 6.5% seems
A lot.
very high.
Really?
Yeah.
Not with, I mean, I can tell you.
It's probably going to be more. Like, is that factoring in tariffs? The impact tariffs will have?
That's what I mean. They're
Well, that's
talking,
the highest since 1981 in America, obviously.
yeah, but it was the same. That's why I said to you blokes, when I was a kid, all signage used to basically be in chalk, right? Because you could rub the price off and raise it. Whereas once the last 20 years, a lot of the signages have been in like permanent, like coffee's just $4, right? It's been $4 for, 10 years. Now it's $4.50, right? Whereas when I was a kid, it'd be like it's $1. Next year, $1.05. Next year, $1.06. Next year, $1.15. So it would you'd always be rubbing it out and raising the price because we had inflation. And it was just nobody liked it. But
Well, everyone had a stable job and you weren't paying 70% of your wage on a mortgage.
that's exactly right.
Yeah. And it cost $50 for a car back then.
My first 500, mate. 500. I bought my first car on a bank card.
Was that a Ferrari or something?
Just bought one. But I just bought
got a good one.
I just bought. It was a HR Holden. Don't slag off at the Holden. And I just bought my son one, and let me tell you, it was a lot bloody more than $500.
Well, Maxi's getting a new car every week.
Yeah, I know. He's a bit of a car dude.
He'll be stoked because he's got a shout out on the podcast.
In all honesty, that when I actually go back and say, what's $500, in today's money, it's not that much worse. Right, like I said this before. When I first started in sales, I was 21, I think, and the company bought me a Nissan Pulsar. Right, that was I
bet you went around fast.
That was my wage rise. Right, a lime green Nissan Pulsar
Extra
hatchback.
fast.
Right, so that would have been about 1985, and I remember distinctly it was 12.5 grand. And I said to them, I want air conditioning, right? And they were like, oh, and the air conditioning was $500, right? So it was 13 grand. That was my company car. I didn't have to pay for it at all, right? Free petrol. And so they didn't give me a wage rise, right? They just said, here you go, we'll give you a car, right? But my point being, that was 13 grand. And if you look at an equivalent car these days, it's not much more, if at all, more than 13 grand in the equivalent.
Yeah, but was yours
Right,
new?
because they've had huge productivity.
Yeah, was that brand new?
Yeah, absolutely.
Okay, yeah. I don't think you're getting much brand new for 13 grand.
No. But what I'm saying, Tom, is 13 grand now is like 40 grand. Well, you can easily get a standard car with air conditioning, power steering. I didn't even have electric windows, like all the bibs and bobs, like Bluetooth and all that stuff. Now you can get some of those Chinese
BYD.
cars really cheap,
Yeah.
right?
That's fair enough.
Yeah, it makes sense.
So that's what I mean. It's a lot of it, and this is the important point, a lot of it's relative, right? A lot of it's like, and that's what you said before, Jacob, right? Like, oh man, like I can sit here and go, oh man, mortgage payments, blah, blah, blah. But as you say, Jacob, oh, well, you had a full-time job, right? You had job security, interest rates were frozen at 13.5% for a mortgage, all these sort of things that made it relatively better off, right? You didn't have a partner who needed to work.
Yeah. Well, yeah. I mean, if you're paying, you might have been paying 20% of your income into a mortgage versus enough people that are paying 50 or 60.
Absolutely. And there was like there were families with a wife and 4 kids on one wage.
Yeah. But
Right, they weren't spectacularly rich, but they were steady incomes. I'm not saying they were great times, but it was a lot steadier than it is today.
Yeah.
people got by.
Yeah.
Fund managers are expecting a recession. I don't know how much I believe them.
Why would you believe a fund manager?
I mean, it seems like we're heading that way, but just because fund managers are saying it makes me want to not believe it.
Yeah, it makes me want to go the other way.
Well, it is. Now, you do have a point there because the deficit in the US is still strong. This is everybody's expecting a recession.
Yeah.
And they may or may not be correct because Trump is talking about doing tax cuts, right? And as we said last week, well, there's winners and losers out of tariffs, right? So I think what you'll find is the US will will move from being a consumer economy to being a producer economy. And
over the next 5 or 10 years.
absolutely, yeah. So what you'll find is there'll be people going, "Oh my God, the consumers are not spending as much." But that will be counterbalanced by saying, yes, but the companies are investing billions to build semiconductors and advanced manufacturing and military stuff, which is offset, right? So instead of buying T-shirts, they'll be building semiconductors. Well, it's still spending money and stuff, right? So it's just rejigging the economy back from being heavily reliant on consumption to being now reliant on production.
Yep, that makes sense. What's interesting about the chart we shared is from March to April, the expected hard landing went from 11% to 49%.
Yeah.
So the tones shifted rapidly.
But that's the recency bias stuff.
Yep.
Again.
Everyone just jumps on the same bandwagon, don't they?
Well, no,
It was probably after all that volatility.
yeah, but also too, and I'm not being rude, but a lot of people don't think for themselves. They just read what other people are saying and go, okay, yeah, all right, yeah, that sounds good.
Apart
But
from
they
our listeners definitely think for themselves.
Well, I hope so.
That's why they're listening to us.
I hope they don't think for themselves. I hope they think about us, right?
What does no
Because
landing?
we're always right.
What does no landing mean?
No landing means we're still going to continue on.
Oh, okay.
Right. It's a one-way street,
nominal
mate.
growth. Nominal. Right. See, they came out this week, and I think growth was negative 0.3 or something. And that's when everyone went, uh-oh. But but here we go. The US stock market goes, oh, well, that's terrible. Okay, up we go. So it's gone up like 4%, right?
Yeah.
Let's do what we've always done. Buy more.
Buy more stock.
Buying,
Yeah.
We're all going to die. Hell, let's buy more stock then.
Yeah. Well, I know. I thought no landing meant the world was ending. 3% of people thought we'd
that kept you up last
we'd
night.
never
Jeez,
land.
that's a bit of a downer.
What if we never land?
We never land.
Yeah.
Oh.
Off to Mars.
Margin debt, we talked about this last week as well. It historically signals market turbulence, or at least a decline does. But I mean, it's come down a bit, hasn't come down a hell of a lot.
Yeah, no. It's just a sort of, that's a little bit of margin debt's a good canary in the coal mine, like transport, right? There's really strong correlations between when margin debt rolls over, the markets fall. And it's all about, again, margin debt is used by institutions to leverage up and, make more money. Then when you start getting margin calls, you get the reverse very quickly.
Yeah.
Right? So it's a good one to watch.
Yeah, and I think you hit the nail on the head there. It's important to correlate between different indicators like margin debt, like transport, CAPE ratio. So if everything's saying the same thing, it makes you go, okay.
There's
let
a good,
me have,
Don't stick your head in the sand.
And they cover different aspects of the economy. So that's why we don't rely on CAPE. There's also investor sentiment, which is how many, retail buyers are there, margin debt. Okay, well, how much money's going into the market? So we use a range of those things.
Yeah. Thursday is just showing what we've literally just talked about, the economy showing signs of it slowing, mostly due to the tariffs. But it's a suck it and see type thing. We might not see the impact of tariffs for another 3 to 6 months.
Yeah, absolutely.
So I just think it's important to kind of keep our finger on the pulse. And
Yeah. That's why it's true what you say. We've got to monitor that and watch how it goes.
Yeah.
And it's a little tough because, sometimes you get aberrations where you get a bounce back in, some things. And then you go, oh, okay, no, it's not bad. And then the next month you come back and go, oh, no, it is bad. Right. And so that's why we're saying to people, you've got to think about hedging and stuff, because in a volatile environment, you've got to rebalance. If you rebalance more often, you'll lower the volatility.
yeah.
Right, but it always feels scary when, I think you were saying, Tom, last week's like you wake up and go, oh, it's down 12, and then 3 hours later you go, now it's down 18, right? The last thing you think is, oh, cool, I'll throw another 50 grand into stocks. It's like,
Did you buy more?
Yes.
Yeah.
Man, so that was like, I was down so much, I had to buy so much. And I was like, this could be the end of me, but I'm doing it.
But, mate, you should learn from your mate here, Mr. Perfect Market Timing.
I
When was that?
yeah.
The day,
The Friday or
yeah,
the
the
Monday?
Friday that the market capitulated, like 4%?
Yeah, it was a shocker.
I moved out of my leveraged short ETF into a leveraged long ETF.
Not advice, but awesome.
Yeah, timed it perfectly. I'm an absolute genius.
Steve was sniping
You
as
get
well.
you get boasting rights about
Yeah,
that.
yeah. So I'm up like 30% in 2 weeks.
Now he'll dine. Now
Dude,
he'll,
your shout, mate.
he'll dine out on that for the next 12 months.
Yeah, even if I'm losing, that's
Oh, remember in March when I picked the bottom? It's like, oh Jesus, yeah.
He'll
right.
remind us every week on the pod.
it's my
Well
ego.
done, well done. You got to, what is it? You got to celebrate your wins or any of that
Type 3.
management garbage.
Just let me be,
type 3.
Let me be type 3.
When we go
Type
offline,
three.
just tell me I'll blindly follow you for all my investing moving forward.
Remember
I'll
what
just give you my
5
money.
minutes ago we said people don't think for themselves.
Yeah, yeah.
Yeah.
Hello, just tell me what to do.
Yeah,
Sheeple.
Just me.
Righto, Coke. Speaking of good times,
Yeah. You know, it's
Coke with a capital C, the liquid.
All right, Sniffles.
Well, they've had they've compounded at 13% almost.
Yep.
For the last however many years, 20 years it seems like.
A long time. Buffett owned both of them, and he's made a mozza.
Yeah.
But your chances of picking those are pretty slim.
Well, yeah, it's easy to look in
when they're a
hindsight.
buck, right? And you think no one ever goes, "Oh man, this is going to be the world drink, and it's going to compound at 13%."
Yeah.
Right?
Looking at this chart, if you're reading or you have the week that was, you can see it. People that were buying around 2000 or 1998 or whatever would have looked at the chart and gone, "Holy shit, that can't continue."
Well, yeah, and
then
if you
look
if you
at it.
draw your line across on, what's the red one? Is that Pepsi or Coke?
Coke.
If you look at Coke in about 98, it takes till 2014 or 13 to get back, and that's where Buffett. Remember, we talked about this a few months ago. That where Buffett said Coke got to like a PE of 50, and he didn't sell, and he basically years later went, "You know what, man? I probably should have sold
Yeah.
a lot of Coke back then," and that's why I think he sold a lot of Apple, because he's made a mozza in Apple. First of all, I think he was probably thinking, I'm not going to do the Coca-Cola trip where I miss out. But Apple has got some real headwinds, as we talked about last week, where they're going, we're going to spend a lot of money in India, Vietnam, and that's going to make iPhones less profitable.
Yeah.
Right? Which means the share price is not worth as much.
Yeah. Well, I wonder how much. So the P was about 50 in 98, but I wonder how much it was in like 2005.
Oh,
The
thing is, though, those returns are based on starting when he started.
Yes, yeah.
Like,
or around there.
if you'd bought in 2010, like, you would have still done well.
Absolutely,
But
you'd
you're
have
not having
smashed it.
these 45,000%
Yep.
gains.
No.
Yep.
You might have 300.
Yeah.
Percent.
Then
Just
we're
a
getting
measly
excited
300.
about making 20.
Yeah.
Can you? What's the next?
I picked the bottom last week. Oh, my Pepsi's up 39,354%.
Buffett's like,
oh, cool.
I'm at 55,000, brother.
What's our next 40,000% stock?
Yeah. Thanks. When
Let's
you find
take it
it,
offline.
let me know. Thanks. Oil, mate, oil.
Not advice, Steve.
Now.
Righto, energy. Speaking of oil and energy, look at those numbers.
Well, to be fair to you, Steve, I don't give you compliments very often, but you've been talking about the energy sector for a while.
Yeah, some of these are okay though. That's like I hold a few of these and they've gone down substantially.
Yeah.
So I'm not going to claim it yet.
So we won't talk about them, will we?
Well, no, but what I'm saying is this is, and again, the important lesson is this is why you hold cash, right? Because you cannot time anything perfectly, nor do you buy it and it automatically goes up where you never need to buy another, piece of it again. So I've got some of them that are down 20 and 30%, but I'm absolutely zero not worried about them. And I'll put more in and rebalance upwards because I've got cash. Plus, I know I'm not going to wake up one morning and go, oh, we don't need oil anymore and my oil stocks are worth zero.
And I think more importantly, they're fair valued or they're cheap as well.
Absolutely.
You're not
That's-
holding anything
absolutely.
that's ridiculously overpriced.
Yeah. And that's what I mean. You've got to be able to have an investment strategy that says, I've got 10 grand. Righto, well, I'm going to put in 5 and I'll hold 5. And if my 5 falls to 3, well, I'll use part of the 5 in cash to put in and build a 3 up. Right? Like you said 5 minutes ago, right? It falls a lot and you go, oh man, but you buy some more. Right? right? And your average price goes from $1 to 80 cents when it's sitting at 70. Well, now you only need a 10% bounce to get back, not 35 or 40.
And if you got something with a decent dividend as well.
Yeah. Oh,
Yeah.
100%. But like that's where you see most people go wrong. If they have 10 grand to play with,
They
put
put it
10
all in. Yeah.
And if it drops 50%, they're like, oh,
Well, that's why we
how
say...
am I going to tell the wife or, or the husband that I need
How's
more
those
money
stocks
to
going?
buy
Oh,
more?
yeah, long-term investor.
Yeah.
But it's true, Tom. It's the reason why you should focus on not losing money, right? And it's two aspects to that. The first part is keep some cash because your first statement should be, what if I'm wrong? Right? It's no good. You don't learn anything when you make 20,000%. You learn when you lose 100%. That's when you go, what did I do wrong? Right? And that's where you have to say, okay, the first question is, how do I lose money? Okay, I buy it because everybody's talking about it. I have no idea what I'm doing, but I'm going to buy some of it. Okay, well, that's a good chance you might lose money. Like you said, I've got 10 grand, I'm buying 10 grand on it. Oh, okay. It's a junior penny mining stock. Oh, okay. So you go through this stuff to say, and that's why I'm confident with my energy stocks because they're big companies. They're not going to turn away overnight. As you say, you look at it and go, oh, it's paying 8%. Okay, well, I don't care being down 30%, right, because I'm getting 8% and it will most likely rise. And it's seldom you actually go, oh, I bought my energy stock the day that it bottomed, right? Well, that's pretty rare. And if something's unattractive, it may be unattractive for quite a while. So you've got to be prepared to hold it and rebalance, right?
Yeah. It's not the whole of your portfolio either.
Well, yeah, and it's just, again, when you get these bull markets, you just, when you're in a bull market, you just think it's going to continue to go up, right?
Yeah.
So,
well, speaking of hedging, we've been talking a lot about gold, precious metals, but the chart that we've got up here is showing basically whenever equities, or in this case the S&P 500, has a bit of a shocker and it falls, like Black Monday, Asian crisis, tech bubble, blah, blah, blah. And now how puts, bond and gold increase in value, and they basically hedge the market. So what we're going to do over the next few weeks is do a precious metals special because we're getting a lot of questions on what to do about gold, platinum, silver. So I think it'd be interesting to spend some time on it. But I think you brought this up, Steve. It would have been about a year ago now, and I think you called it a perpetual portfolio where you've got equities, gold, bonds, cash, and how that people can rotate through that, and it tends to beat the market. Maybe we can chat about that for a sec.
Yeah. There's two steps there. There was a guy called Harry Brown, right, who came out in the 70s, and he said he introduced what he called the permanent portfolio.
That's it. Yeah,
and that was 25% US stocks, 25% government bonds, 25% gold, and 25% cash, right? Now, the idea is that gold and stocks and treasuries, bonds and stocks are uncorrelated. So the idea is you diversify against, I'll ignore cash, right? You diversify against the three assets. Right, 25% in each, right? So 25% times 400, right? And all you do is every year is you just rebalance back to everything to 25%. So if stocks have had a stellar year, you sell some stocks. If they're uncorrelated, that means gold's probably gone down. So you put some in gold and you put some in treasuries, right? But you keep everything at 25%. That generally outperforms the market. So when stocks are doing well, you're getting the benefit from stocks.
Yep.
And when gold is doing well and stocks are crashing, you make money from gold. So the important point is you lower the volatility. Yeah. You don't get the maximum return, but you don't suffer the big drawdowns, right? And that's why we say don't lose money. So we've created the perpetual portfolio.
That's it. Yeah.
Right, in Wells 3, which is the same sort of basic idea, which says, here's 10 ETFs, don't just rebalance them between them, right? And that's it's the same idea, but again, it draws what we're trying to point out here is what you want to do in investing is lower in stock investing is lower that volatility, right, and just make steady. Anyone would say, if I can make a steady 10%, that's better than saying, oh, I made 50, oh, I lost 70, oh, I made 42, oh, I lost 15, right? Because that'll throw you around all over the place. It's much easier, again, to rebalance, use cash, rebalance your portfolio to lower the volatility,
Yep.
right?
Yep.
I mean, I just think it's fascinating that something so, and we all know that the more boring, the better, right? And often in investing, but something that simple.
It's not boring when, if one of your asset classes has an absolute cracker in relation to the rest,
Yes.
you end up with more stocks and more gold than you did before.
Yeah.
Yeah.
You know?
But
So it's just
essentially,
you're building.
Yeah, it's not complicated.
No.
Right? It doesn't have to be, and it's complicated by the finance sector talking about squiggly lines every day of the week.
And neodymium.
Right? Yeah. And neodymium. That's right. Yeah.
So funny. All right, what's the latest on your best mate Musk?
Ah, the genius.
They're worried about his focus.
Well, yes, I didn't put it in this week. I'll put it in next week. But there was quite a few articles that came out this week that said the board has started searching for another CEO.
Saw that. You called that?
Clickbait.
That's right. And
Clickbait.
then they
Moriarty.
came out, of course, and said, "Oh, no,
Jokes.
that's a lie.
Wouldn't do that.
We wouldn't do that." Hello, Elon. A little bit of a message here from the board. Get your ass back to head office, Buster.
I just like the photo that you chose.
No, he looks
Straight.
frazzled.
Probably kid number 46.
Oh, well, we'll keep everyone up to
But
date on
anyway,
that.
the stock price is rising, and they've had terrible sales. I think did I send
people
it to
think
you
it's
guys?
cheap.
There was Swedish Tesla sales have gone down 80%.
Wow. No, you didn't.
Yeah, because everyone's probably buying BYD.
Well, they probably don't like blokes who do Nazi salutes.
Yeah, maybe.
Right.
Well, the people
Sweden,
think it's cheap, though.
Sweden is very big on the public sector, mate. So when Elon Musk gets in there and starts talking about Doge and, everything public's evil and everything private's good, that's when some countries go, you know what, we might just teach this guy a lesson.
Put a pause on that.
Boycott.
Well, below the
Exactly.
200-day moving average, you're going to get your kind of Tesla fanboys go, this is super cheap. And they're jumping back in.
Best of luck, lads. PE 158, I think.
Yeah.
That's cheap.
All right, let's leave it
I
there.
think we'll leave it there, Tom. Thanks very much.
So just one sec. Coming up, we'll have a rare earth special. We've got a precious metals special. And if you haven't already gone to the website and joined the week that was, so you can look at the funny photos of Elon that we're sending every week, go and do that. TotalMoneyManagement.com.au. Cheers.
Thanks,
Thank you.
folks.
As always, remember, we don't provide financial advice.